Good afternoon, welcome to GrainTV. My name's Cody Bills, Brock Shimano. Today is Tuesday the 21st and we had a bit of a mixed day here in Chicago. Let's turn right over to the Fire Tip trading platform, see where we closed off the day here. Corn for July delivery down 9.5 cents, while soybeans traded up 13 3/4 on that same contract. Wheat trading down 4 3/4, and Kansas City wheat trading down 6.5. Now this soybean market, especially in the old crop, is on fire here. We've been moving higher for about 4 days in a row now. Brock, is there any stopping it at this point? Can we move higher, or is there any resistance here in the next day?
Cody, let's turn over the daily chart for the July soybean contract here. What we're looking at is that July soybean contract. Each bar is worth 1 day of price movement. Basically, we're looking back over time. Right here is what we want to focus on, is this resistance line that we drew in here. We hit the highs here in the 1st of November last year. That was right at 1480.5. Again, we tested those highs in the early part of February at 1477.5, and later in February we once again hit it at 1483.5. If we continue to follow that line here, you'll see right where we ended up here today. We'll zoom in here a little bit. You can see that we're trading at 1478.5 as of the close here today. I think this is going to provide some technical resistance. This is a pretty strong resistance line. We have tested it 3 times in the past. We're unable to get above it. Really the fundamentals aren't there to push us above it. We've seen rather slow export sales here recently, and I don't think this pattern is going to continue for much longer if we do break above that level.
That sounds fair enough. And just to straighten out the record here, we talked about a resistance level around that 1463 level, and of course that was a couple, that was almost 10 cents. 15 cents ago. Really, one of the things that we want to keep in mind here when we're looking at charts is that resistance can be in a range, and that really what we're looking for was that high side of this channel that we've been trading to offer up some resistance. Notice in sometimes in history, we traded up around that 1463 and that offered resistance. Other times we traded through that and this 1480 level was offering resistance. So right now we've been able to go through that 1463 and we're really looking for 1480 to hold here, and if it doesn't, then I think we could actually get a little bit of a breakout. But watch out for that that fake out where you break out and then you pull back in that same trading day and you're unable to hold above that line. If that happens, sometimes traders can get stuck on the wrong side of the market and it can catapult them back the other way. One other thing to keep in mind too is that when we've been looking at the futures market rallying, if you've been focusing at all on the basis, you'll notice that we have had significant movements lower in the basis. On average, since Thursday, the change from Thursday to Monday, on average across the U.S., has been about 7.5 cents lower here, and that means really basis is collapsing. On average, river terminals have moved down 20 cents. Now that's only Monday. Today we're entering the cash market bids. We're getting the data, and it seems like we're seeing other major facilities dropping their basis significantly. We saw 2 of them drop by 30 cents today. So the bottom line here is that soybean spot basis is really collapsing right now, and it started out mostly on the river. We saw key crush facilities losing basis, or really shedding basis, but the West was mosely isolated. It really wasn't. It was a little bit insulated from that movement. Now we're starting to see that effect roll over into the western part of the grain belt, and on average, the U.S. this soybean basis is really collapsing here. So just pay close attention to that, and if you have old crop beans, look to try and call an elevator, see if you can lock in some of this basis, because I am a bit concerned that we'll continue to see this collapse as we move closer to delivery.
Cody, you bring up a good point. We are moving closer to delivery. Delivery is about a month out right now. First notice date for July contracts at the end of July, or excuse me, end of June. So we do kind of see a convergence of what the cash market is doing and what the futures market are doing. I think this is going to continue to be the pattern here for the next month or so. I would anticipate, though, that the futures market is going to start to become a little bit weaker, and the basis levels will kind of stabilize here in the near term, and we'll see that futures market come down quicker than what the cash market is.
Yeah, absolutely. Now let's actually switch gears here. Let's talk a little bit about weather. Right now we're looking at the 7-day outlook, the 7-day forecast, and what you're seeing is heavier rain throughout the Midwest. We know that planting progress is delayed, but it looks like we're going to continue to get heavier rain, but we should start to see a warmer trend in the western part of the grain belt. That will be helpful for the grain that we have put into the ground as it starts to develop. But do keep in mind that this will disrupt planting progress going forward. It's not enough to keep us entirely out of the field, but we should see some progress here this week in planting, but it's definitely going to continue to slow it down and disrupt this already record slow pace. But thanks a lot for tuning in. That wraps up this afternoon's Grain TV. Remember to follow us on Twitter. It's at GrainTV. If you have any questions, give us a call at 877-472-4607. Thanks a lot for tuning in. We'll see you tomorrow.